very warm welcome. You're watching Market Cafe on ET Now. This is Priyanka Uppal. After a fantastic progressive budget, spending, consumption and spending was the major focus, maintaining the fiscal prudence and on the capex and a boost to capex. Budget gave a green signal on many fronts for a progressive and of course we are in for a developing economy. But at the same time, the cues which we gather from the US markets overnight, the kind of tariffs what Trump has imposed, that has created some tremors around the Asia-Pacific market. In fact, GIFT Nifty is also indicating a soft start. But let's get you, what is the key news? The key news to focus at this moment is Trump has announced 25% of tariffs on Mexico and even on Canada and 10% on goods imported from China. At the same time, in retaliation, Mexico has also spoken about, they are also considering, Canada has in a retaliation spoken about the tariff imposing tariffs on the goods imported from US, and China is talking about filing a lawsuit with WTO. At the same time, Asian markets are reacting deeply to it, the kind of cut we see on Asian market, and in fact, you talk about US futures, they also reacted. Looks like we are in for a global trade war. But at the same time, it gave a jump to oil and gasoline and even dollar index advance. So let's get you all the key events, what happened over the overnight. Let's first track what exactly happened in US markets on Friday. This is going to be the crucial week for the earnings also, and so far the earnings which are coming in from S&P 500 has been good. Friday there would be a key economic data which has to come in, but the key story we're tracking at this point in time is the kind of impact we could see on the Trump tariff war. Global markets and even Indian markets, what the start they show, the GIFT Nifty what is showing is a soft start, a cut of around about 170 points. But what happened on Friday? Let's get you that. How did markets react to it? Futures, of course, reacted negatively. But on Friday, if you talk about Dow futures, they dropped more than 450 points. S&P 500 was lower by 0.5%, and in fact, Dow also closed lower by on this particular news, though it happened on over the weekend. But then Dow, S&P and Nasdaq did give a soft closing on Friday when they closed. And now futures also reacting, and of course the kind of move we've seen in oil market, oil and gasoline, they have jumped. Bitcoin have reacted. In fact, a huge liquidation which came in post this news from the Bitcoin market. So for sure, today is going to be a key day. We have to watch out how different asset class as well as the different economies are going to react on this big story of the moment. Well, I have Shriyansi also joining with me. Shriyansi, morning. We see that's a key event, of course. We did have a big event over the weekend. That was a good news for Indian markets, progressive budget. But looks like this news is going to create tremors today.
Well, absolutely. It does look like this is going to create tremors. You do have a earnings-heavy week when it comes to the US. But let's take a closer look at the tariffs then, because trade tensions flare as US President Donald Trump then slaps 25% tariffs on Mexico and Canada and 10% coming in on China, citing threats from illegal immigration as well as drugs. And the administration then had given the three nations time till February 1st on the condition that narcotics and illegal immigrants be stopped by the authorities. In fact, the order will now be coming into effect tomorrow. Remember that the country does annual trade worth $1.6 trillion with Canada, Mexico and China. So that's a very significant number. And Canada, of course, hits back with 25% tariffs coming in on $155 billion worth of goods when you're talking about US goods. While you do also have Mexico that has also was retaliation, but also stayed vague when it comes to the kind of magnitude, the kind of quantum of the retaliation that they're talking about. Meanwhile, you do have the EU that is watching closely as Trump then hints at expanding the duties of countries pushed back. Let's also go across to my colleague Shinjoy then, who's standing by with more details.
Long before he became president, Donald Trump used to say that his favorite word in the English dictionary was the word tariff. So once he became president, it was only natural that there would be tariffs on imports into America. So Canada faces it, Mexico faces it, China faces it. Counter tariffs have come from the Canadian side, but China is the big issue because China is the elephant in the room in some ways. China's economy is 17 trillion, 4 times India's. Now, what can China do? What will China do? Because with a powerful economy, China can do quite a lot. Because China has a huge surplus of American dollars. And if it lets some of that into the market, it could drastically hit the American dollar. So we'll have to see what China does and how effective the Chinese reaction will be.
Right, looks like a global trade war is setting in, but at the same time, Canada, Mexico and China are hitting back at Trump's tariffs. Canada is imposing 25% duties on $155 billion worth of US goods, including beer, bourbon and household appliances. With Ontario pulling American alcohol from store shelves, Mexico promises retaliation but hasn't revealed specifics so far. While President Sheinbaum slams Trump's accusations, China, meanwhile, is taking the legal route, filing a WTO complaint and vowing countermeasures as well. As global trade tensions mount, consumers on both sides of the border could soon feel the pinch on this. In fact, let's listen into what exactly Canadian PMs made the announcement.
Canada will be responding to the U.S. trade action with 25% tariffs against $155 billion worth of American goods. This will include immediate tariffs on $30 billion worth of goods as of Tuesday, followed by further tariffs on $125 billion worth of American products in 21 days' time to allow Canadian companies and supply chains to seek to find alternatives.
All right, then that's the word coming in from the Canadian PM. But let's also take a closer look then at what brokerages then had to say and in terms of what they're penciling in when it comes to Trump's tariffs. In fact, we have Ashesha standing by with just that roundup.
Well, yes, first up, let's talk about capital economics because they believe that this could perhaps be the first step in what could become a destructive trade war going forward. So some bold statements coming in from brokerage houses. They believe that tariffs could plunge both Canada as well as Mexico in recession in the second half of 2025. They do not expect any relief on these tariffs anytime soon and that perhaps no deal could be signed for removal of tariffs that have been imposed currently. In fact, they believe more sectors could be added for exemption and inflation, which has been a concern for the last several months, is likely to accelerate going forward. Capital Economics says the US inflation is likely to climb back above 3% mark this year and any chance of higher interest rate cuts for 2025 have also died on account of these steps that US has taken. Canada, Mexico and China totally contribute about 43% of the total imports into US and this of course is likely to have implications going forward. Nomura meanwhile believes that tit for tat response is likely to escalate a trade war going forward. Non-US currencies have been depreciating for the last several months and this is also likely to continue. They see a risk of more tariffs to other parts of the world, including Europe. Remember, as of now, only China, Mexico and Canada have been exposed to these tariffs and this is likely to expand going forward into other countries of the world, including Europe. Markets, of course, will focus on inflation concerns and growth concerns going forward. So, some bold statements coming in. Inflation is likely to take a knock on account of these measures that they have taken and perhaps trade war concerns will escalate going forward on account of this.
Trade war could escalate and even Nomura is talking about tit for tat response could escalate the dire situation. Thanks very much, Ashesha, for that brief coming in from what brokerages have to say on this. We stay for a short break here. When we come back, we get you more cues for the morning so that we set you up for the trading day. Welcome back. You're watching Market Cafe on ET now. So it was a budget bonanza for the middle class. And what exactly Nirmala Sitharaman did mention, she spoke about that the rate reduction is a first step towards new tax bill. And in fact, what exactly she had to say about the state versus center finances in the budget? Listen.
Will make people have more money in their hands. When people have money in their hands, they make their judgment about whether they want to spend it entirely or spend some out of it, and also make sure that they save something else, some amount from it. So I expect this would show both in terms of the consumption spending and also in terms of the savings, which can be through very many different instruments, but both will be influenced. But I wouldn't want to directly say this is the only way we are looking at growing up to 8%. These are steps which will have implications for the near term and the medium term future. So many other things also will have to simultaneously happen, which we are clearly indicating in the budget part A, through which I think India will open up so many more avenues for its growth trajectory, and those and their collaterals, or those and their secondary effects, will certainly ensure that we'll move towards 8.
Yeah, just very broadly, in addition to the increased consumption, what are the other factors that are needed to reach the 8%? Just can you?
No, as I said, there will be a lot of secondary effects from those proposals in Part A, which will themselves trigger a path towards growth. And also, I think the way in which we've looked at the customs tariff rationalization, import of essential goods coming down in tariff, are all indicators towards propelling greater growth.
Yeah, I mean, your revenue projections are pretty optimistic, and you are at the same time you are also sacrificing 1.3 lakh crore in personal tax exemption in this one. Where are those revenues going to come from? How optimistic are you that you will be able to meet those projections?
I thought I was accused of always being conservative in my estimates. And I've every time said our numbers are realistic because we do a lot of, prior to announcing in the budget the numbers, we do a lot of work and understand that we are definitely not exaggerating our targets. At the same time, we do not want to underestimate it and for domain experts later on to say, oh, you've underestimated today, you're performing this much, it's not great. We've always shown realistic numbers. So that is where we have placed the numbers. I think for want of criticism, they seem to be picking up. I'm sorry to be so blunt. I've said this even last time when they alleged me of, you're announcing only for your allied partners. Andhra and Bihar are the only two you're naming. Nobody has had anything else coming. I think these are lame and lazy, quick way to look at the budget. Every state gets its share of all the central schemes, gets their due grants in aid, which are decided by the Finance Commission. Every state gets a part of the due for the expressways, the freight corridors, the railways, the airports, and some big ticket seaports, which are also getting built. Each year I don't announce them, but they are funded by us for over several years. Major port projects are never completed within 1 year. So those monies get stopped the next year, when I don't name them? No, it still goes to them. So it's all right. For them to have to comment something is fine, but I'd rather want them to go through the details of it and engage constructively.
Yeah. There's even an outlandish kind of a suggestion by some leaders in the South who have said that maybe they should produce more children so that they can get more, contributions from the state because they are unfairly being targeted because their population is lower compared to the northern states. Is that a valid observation at all?
My response to that is, it is for the states to engage with the Finance Commission, express their concerns about the parameters based on which the tax devolution principles are laid down by each of the Finance Commissions. And if they think over a decade they've had a distinctly different paradigm happening there, it is for them to highlight to the Finance Commission. After all, Government of India takes the Finance Commission's recommendations, particularly on the core suggestions, and follows it. And to then voice concerns as though this Government of India has decided is not a healthy strategy.
So you would say that this suggestion that they should produce more children is a ridiculous way to get
No, I'm
more.
not even commenting on it, because whatever their point of view is, based on which they think the Finance Commission is coming up with allocations, it is for them to highlight to the Finance Commission,
Right.
whatever the principle be or whatever the factor be.
Ma'am, I have one more question about sales, not to do with budget, but about Delhi. We have all been talking about freebies in elections, and BJP has always been opposed to freebies, but this is happening in Delhi that everyone is offering freebies. What is your view on how do you see this?
No, I strongly feel that states and states' capacity to take on such welfare measures will have to be studied before announcing any such. And I strongly believe such a homework is done by BJP-ruled states, and only then do they announce it, because you take the example of any number of states which were BJP-ruled, and while going to the elections, they have come up with solutions.
Alright, then that's the word coming in by none other than the Finance Minister. Let's also listen into some other commentary coming in then, because there is going to be a change of hands in the capex cycle from central government towards the private sector. That's the word coming in from Ravi Dharamshi. What do analysts then make of this budget? We got up with a whole host of experts, starting with Vallabh Bhanshali, Ravi Dharamshi, Hiren Ved, as well as Ramdev Agarwal. Let's go across and listen in to what they then had to say.
Manufacturing, clearly, we can see the multiples on companies like Dixon and other, manufacturing outsourcing services. And I think these can expand massively. So I think that's one area that is likely to do well, and I think we need to provide enough boost to that. Real estate is a very, very significant sector for us. It's still a very small, the organized real estate sector in India is still very small. If this credit and consumption, are being pushed the way they are, I think there's a long way to go.
There is a need to segregate within the capex cycle also. So there is going to be a change of hands in the capex cycle from central government towards private sector, and there is going to be a broad basing of the real estate from the premium end to the more mass and lower end of the economy. I would say definitely some amount of exposure. If the portfolio has not been showing some amount of exposure to consumption, then this is the time to be adding.
There is a case for a greater allocation to discretionary consumption, right? So whether it is autos, whether it is retailing, I think there will be some pickup that we will see going forward. Another area which I think will be very interesting from a consumer perspective would be real estate and tourism, right? These are two sectors which should benefit.
I would prefer a digital company rather than ऐसा consumption में होगा, लेकिन digital consumption company is better off than non-digital consumption company. Banks मेरे हिसाब से they should do well. मेरे को लगता है बैंक्स ओवरऑल जो है ना अच्छा ही करेगा, क्योंकि MSME और का जो सब लोन गारंटी हुआ था वो भी उन्होंने बढ़ाया है. 25-26 मेरे को लगता है बैंक्स के लिए गोल्डन पीरियड होगा, when their credit cost will be normal and hopefully there will be leeway in terms of their credit expansion.
All right, so this was what the market veteran had to speak about the budget, but then the tax proposal is expected to bring a big boost to consumption in a bid to boost the economy. We caught up with another set of market experts. We did speak to Nilesh Shah, Sunil Singhania, A. Balasubramaniam to understand what are the growth sectors they are eyeing at.
Capital markets should do well irrespective of whether it's capex or consumer goods. It's all a function of how capital markets and how markets kind of react to that. So I think clearly that's a space which will anyway is in for a structural long-term bull market. I mean, if India is in a long-term bull market, the capital market related side of the market is bound to do well. The tailwinds are very, very strong, irrespective of whether it is capital goods or consumption.
Discretionary consumption was something we were looking at because last 1.5 years, there was a slowdown, and at least our view is that with farm income looking good, with a very busy festival and wedding season, and with liquidity also being easing with RBI pumping in 1.5 lakh crore only a few days back, I think consumption should pick up, and maybe this budget will give it a boost. So maybe slightly yes, but in the portfolio and India as a market, unless there is growth in capital expenditure, I don't think we are going to have meaningful upsides.
Definitely, the budget is more focused towards consumption. See, capex is something one number. They have been doing it for last almost 1.5 years. We have seen a significant pickup coming from private sector capex. If you take the capex numbers adjusted for private sectors, I'm sure the number will be higher than the last 2 years' numbers from overall spending point of view. Therefore, that's not something which I think one should worry about it. But clearly, there was a need for boosting the consumption. There is a need for boosting the agriculture economy by focusing on agricultural sectors, and rural income has to also rise. I think the combined the taxation, the multiplier effect of that, if you see, I think the 1 lakh crore number that comes, if we take the multiplier effect of this, if we take money multiplier effect.
Alright, then that's what experts then had to say about the big boost coming in to consumption. Now, this has been called a people's budget. In fact, Finance Minister Nirmala Sitharaman has given major relief coming in to the middle class with tax reforms. So let's get a sense of what the people then had to say, because ET now caught up with people to get their take on the budget, and this is what we got.
New regime is a welcome bonus for middle class people or higher class people. Even income having 50 lakh rupees, there is a saving of 1 lakh 10 rupees, 1 lakh 10,000 rupees. And if somebody has a 25 lakhs income, there is also saving of 70,000 rupees. So this is a welcome for each and everyone who are earning in service sector or as an individual.
It is not the same कि तभी जो people were happy within 18 to 20 lakhs 20,000 of salary also, but now even people having 30 to 40 salary are struggling. So that is the main thing. So that the only thing is taxes should not be waived off. Government should focus on different things, such as how can it be helpful to the people to reduce all the essential commodities. Like if you reduce tax there, people will eventually spend. They are here to spend only. So but the thing is, the other taxes are increasing. Like I can't say about that, but still I can say I can only expect government to decrease taxes on those things, so that people don't find it, they don't feel like they are paying too much.
उनको पता चला है कि what the power of people, क्योंकि अभी ये सिचुएशन ऐसा था क्योंकि उनको उतना उनको सीट नहीं मिला था. द मेन थिंग इज दैट. तो वो एक लेवल से लेके उन्होंने सोचा कि पीपल को क्या चाहिए, क्योंकि हम एवरी टाइम हम उनको बोलेंगे और दे देंगे, ऐसा नहीं होता है. तो ये अच्छा था. और ये अभी तक का मेरे ख्याल से मोदी गवर्नमेंट का इट वाज अ गुड बजट.
वी ओनली नो अबाउट tax regime, new regime. They have only focused on new regime. There is no talk on old regime. She has not uttered any word on old regime. That means there is no change in old regime, and they are focusing on new regime. This will lead to more investments with unbiased motivation. Like people will invest for their investment, not for tax saving purpose. They will understand what is investment actually.
Main highlight यही है जो इनकम टैक्स स्लैब उन्होंने अभी बढ़ाया हुआ है. That is really interesting. और मिडिल क्लास लोगों के लिए उसका काफ़ी फर्क गिरेगा, लोगों को काफ़ी पसंद आएगा ये बजट. बिजनेसमैन्स के लिए भी थोड़ा अगर ध्यान दिया जाए कि जीएसटी करने के बाद जैसे बाकी के प्रोफेशनल टैक्स हैं या इस तरह के और टैक्सेस हैं, अगर उसको भी एक ही साथ लिया जाए तो काफ़ी आराम मिल जाएगा लोगों को.
12 लाख के नीचे वाले जो लोग हैं उनको थोड़ा रिलीफ मिल गया है, क्योंकि सैलरी जो पीपल है वो नॉर्मली जो 5 लाख 10 लाख और 12 लाख के बीच में आते हैं उनको अच्छा रिलीफ मिला है, क्योंकि पहले 5% 10% जो टैक्स उनका जाता था वो अभी कम हो गया. वो एक अच्छा बेनिफिट है.
Okay, so that's a kind of reaction coming in from the common man after a big budget booster for the middle class at least. But the GST collection for January came in at 1.96 lakh crore rupees, which is a jump of whopping 12% from January 2024 year, Y-on-Y basis. For the period of April to January period, mop-up jumped by 9.4%. Now, this is a healthy collection which reflects the robust domestic consumption and even the buoyant import activity. This set to bode well for India's fiscal health and economic recovery. Also, the record high collection was recorded in April month of 2024, which was at 2.1 lakh crore rupees.
Alright, then with that, it's time for a very quick breather on the show. We'll get you more news and updates on the other side. So see you then. Welcome back. Thank you so much for staying tuned in. Well, let's get to the futures and options roundup then. Anansh is standing by with just that.
Right, so starting with Nifty first, Nifty snapped its 4-session gaining streak to close slightly in red. But if you see on chart, then Nifty seems to be taking strong resistance at that 23,550 mark. Now, this is the level where we were facing strong support earlier, and now it is acting as a strong resistance. So we need to give a decisive break about this to be on a positive side. Also, in index future, we are seeing that open interest has gone down by around 2%, indicating long unwinding. So again, a bit of a bearish sign here. Whereas on option front, we are seeing call writing happening at 23,800, indicating call writers are expecting strong resistance around this level. So if we cross that 23,550 resistance, then we can expect a 200-point up move, and next resistance would be directly at 23,800 mark. Now, if we talk about Nifty Bank, then Nifty Bank had a volatile session on Saturday. It gave a break from that Friday's high and low, but eventually it closed within its Friday's range only. If we see on chart, then Nifty Bank has been facing strong resistance at that 50,000 psychological mark, and it has been in a consolidation range from last around 15 sessions. So here also we need to give a decisive break above that 50,000 mark to be on a positive front. If we talk about index futures, then here we are seeing open interest has gone up by around 1.4%, indicating short build-up. So a bit of a bearish sign here as well.
Okay, so bearish sign continues to, we continue to gather the bearish sign only. The outlook hasn't changed much, but in the meantime, let's get you a quick check on the Asian market, because that one is faring lower today, and especially after the Trump tariff action, as a retaliation, economies are also responding to it. Countries are talking about the tariff they could possibly imply on US goods. But at the same time, if you look at the Asian markets, Kospi is down by 0.6%. Nikkei was the one which was hammered the most. ASX, no recovery here at the moment. Nikkei has fallen further to 2.5% now, and ASX has also fallen by more than 1%. It's down by 1.6% at the moment. So clearly, the jitters, the tremors, what was getting anticipated are being felt. Markets are clearly negatively reacting to what could actually be a step towards escalation of the global trade war. And that's what the brokerages are also reacting to it. But let's see, how do we react? Is this a initial reaction that Indian markets react, the kind of GIFT Nifty implied is indicating, or there could be some respite, because we did have a positive set of news coming in from the budget, Shreyansi?
Well, absolutely, Priyanka. Yeah, that's going to be very important to watch out for. But let's also take a look at the stocks that you should then be keeping on your radar. In fact, Snehi is standing by with just that, Snehi.
Absolutely. In fact, lots of stocks to watch out for in today's trade. Good morning to both of you.
Morning.
Good morning to our viewers as well. Let's start by looking at the one earnings candidate that we had over the course of the weekend, and that was budget day. Remember, market was open. But post Saturday market hours, we had numbers coming in from Aarti Industries. Largely in line set of Q3 numbers coming in on a year-on-year consolidated basis. Revenues were up 8%. However, pressure was seen on the EBITDA front. That was down 12%. Net profit was down 63%. Margins have also shrunk from 15.1% earlier to 11.6% on a year-on-year basis. Moving away from that, let's look at the auto sales numbers that we have got in post Saturday then. Hero Moto has sold 4.42 lakh vehicles versus 4.33 lakh units, which is up 2.1% on a year-on-year basis. Global sales are up a whopping 141% year-on-year. However, on the flip side, domestic sales have seen some pressure because they are down 2% on a year-on-year basis. Along with that, we also have Eicher Motors Royal Enfield numbers coming in, and total sales for Jan is up 20% on a year-on-year basis. YTD sales up 7%. International biz has also done well in January, up almost 80% on a year-on-year basis. YTD sales up 40%. Moving away from auto sales, let's take a look at Lupin. They've announced the closure of the inspection of a US FDA at their Somerset facility with no observations coming in. So big positive coming in for Lupin today. MOIL, on the back of its business update, will be in focus. Best ever January manganese ore production has been done. Total sales also up 5% year-on-year. Lastly, Happiest Minds will be in focus. They've signed a deal with Gavs Technology to buy 100% stake in their Middle East business. So watch out for all of these stocks in today's trade.
All right, so a lot of stocks to track today. Earnings, of course, the budget stocks, and of course, the auto numbers that came in over the weekend. Thanks very much, Snehi. With this, it's a wrap on Market Cafe, but don't go anywhere. All the action starts at ET now with the markets opening.